I've booked all my appointments. My goal is to always have 15 to 20 appointments because I plan on being in the field 3 days. So what I do when I'm done booking my appointments is I simply go through all of my leads. I put the name, and I always do the male on the left and the female on the right. I put their names on the top. I calculate their ages. I put their ages on there, and I put the amount of the mortgage in the corner over here. Then what I do is I go through and I simply look at my calendar and I put all of my leads in order. When you're on the phone and you're booking your appointments, before you let them go, after you've booked the appointment, by the way, Bill, just curious, any health issues you or Mary are dealing with, diabetes, heart, lung cancer, COPD, kidney, any history, and just make a note of it. And then the night before, if you go through the applications that you use every week, Mutual of Omaha, Phoenix, Foresters, whoever it is, just go through the underwriting and look up any health issues that they have. This is your roadmap, and the reason we created this is because it's important to really get the information you need in order to be able to find out what is going on in the home. Understand, a lot of people do not understand where they're weak financially and where they might be exposed. So by gathering this information, if you simply, it's been laid out so that it's very sequential in thinking, it should have a very good flow in the home. So if you simply follow it, these are going to guide the conversation that you're going to have with the husband and wife, or the wife or husband, whoever it is that you're meeting with. This is not a data collection form. It's meant to guide the conversation. Everything is there that you need. The questions are going to be derived from this information, and it's going to help you find out where you need to go to try and help this family that you're sitting in front of put themselves into a position of being covered in the event of the worst case happening. And get an idea of what you can write for them. And just on the front of the lead, just take and make a little small note above there, and nobody else is going to see it but you. And assuming nothing else comes up when you're in the home, you're going to have a good idea of what product you're going to be able to use for them, and you'll find that it'll take a lot of pressure off of you in the very beginning when you go in the home. And of course, you can always call us. You have our phone numbers. We're always there for you, right there while you're in front of the client. Or you can call the insurance carrier and ask to do a risk assessment. You're never alone, and we'll make sure we do all we can to help you. But if you do these simple things prior to going out the next day and run your appointments in the beginning, you'll find that you'll be a lot less stressed, a lot more organized, and things will flow a lot better. Now what we're going to do is we're going to actually go through an in-home presentation so you can see what we actually do in the home. Typically when you walk into the home, be real. Don't compliment something if it's not something you would normally compliment. Be yourself, be real, be honest. With your permission, what I'm going to do is just ask you guys some questions, okay? Because right now I'm a blank slate. I just need to get a better understanding of kind of where you are and what your situation is. And then from there, I'll know what I can and can't do. Does that make sense?
Sure.
Okay. So just to verify, Mike, you are 62 years of age, correct?
Correct.
And Pam, you're 59.
Yes.
And the mortgage is about $75,000. Okay, let's start with the monthly payment. What is the monthly payment?
I don't know, 850?
Oh,
You do the bills.
Oh, okay. That's right, I do.
pretty
Yeah,
typical.
about 850. Yeah.
Pretty typical, I usually see
I was
that.
thinking of the tax and,
And does that include taxes and
yeah,
insurance?
actually with tax and insurance, it's
Awesome.
$1,050, something like that.
Oh, it's $1,050?
Yeah,
Okay,
yeah.
thank you. And is that a 30-year, 20-year?
30-year.
It's a 30-year? And what's your interest rate? 3.75. Mike, starting with you, any health issues, diabetes, heart, lung cancer, COPD, kidney issues, any history?
Yeah, currently I do take some blood pressure medication.
Lisinopril?
Yeah, cholesterol. But other than that, I'm pretty healthy.
You're pretty healthy. So no history of heart attacks, no stents, no cancer, no history of anything.
Nope.
Beautiful. You're in great shape. You're doing well. Pretty rare for a 62-year-old based on what we see.
Yeah.
Pam, same question to you. Diabetes, heart, lung cancers.
Diabetes,
Are you on a pill or are you on insulin?
insulin.
You're on insulin. Okay. What age were you diagnosed with diabetes?
It was after 50,
So you were 50 plus when you were diagnosed?
yes,
And what age did they put you on insulin?
just a couple years ago.
So about 57
Yes.
approximately? Okay. Anything else? Any heart issues, stents, heart attacks?
High blood pressure?
Pretty common when you have diabetes. How about cholesterol?
Yes.
Cholesterol as well. Anything else?
No, that's it.
No history of anything, no heart attacks, no cancer?
No.
Okay, perfect. Mike, again, back to you. What is your current monthly income? Just you?
Just me, see, about $3,500, I'd say, comes into the home.
Okay. And Pam, same question to you.
About 2,500.
2,500. So together, you guys are making about 6,000 a month together? Is that right?
Yeah, that sounds about right.
Okay. So, Mike, you die tomorrow unexpectedly driving to work. Somebody runs a traffic light, T-bones you, and you die at the scene of the accident. How much of this $3,500 would keep coming in month after month to Pam?
I wouldn't be working, so I'd have to say 0.
0. Okay. Pretty common. Pam, same question.
0.
0. Okay. So your income then would go pretty much in half for both of you. A little bit more on your end,
Yeah.
Pam. Okay.
Yep.
Mike, any traditional life insurance at all on you outside of work?
No, right now, we really just have the work insurance.
Okay.
Does that work?
Well, I mean, here's the way we look at it and what we always say. Load up at work, get as much as you can, okay, because it's cheap. But don't plan on it. Never plan on it simply because you don't hold it, you don't control it, you don't own it. You lose your job, something happens, it's gone, right? Okay. So, but it's cheap, and if it's there upon death and you're still there and you still have it, it's icing on the cake. Just don't plan on it. Does that make sense?
Yeah.
Okay.
That's really all I have.
Okay. Pam, how about you?
Well, I have a small one, 40,000.
Who's that through? Is that outside of work?
Yes.
Okay.
Yes. Let's see, who is that with? Mutual Omaha, I think.
Really, I represent them.
Oh.
Did you get that through the mail, or did you sit down with somebody?
No, I sat down with somebody.
And how long have you had it?
I've had it 15 years.
15 years. Good for you. Okay, anything else?
No.
Okay. Is there anything that would act like coverage? Like a 401k, an IRA, anything like that on you, Mike?
I have a 401k that has 70,000 in it, I think.
70,000? Okay. And how about you, Pam?
I have an IRA. It has about 90,000 in it.
90,000? Okay. All right. Let me ask you this. When I look at your situation, your incomes are really not that far apart. Although I will say, when you look at it, Pam, if you lose $1,000, Mike dies unexpectedly, you lose his $3,500, and you're going to lose over a third of your income just in mortgage payment. Is that a concern to you at all?
Yes.
Okay. And by the way, if Mike dies unexpectedly, which is pretty much how we all die, almost, would you stay in the home? Would you want to stay, or do you plan on moving?
I'd like to stay.
You would. How about you, Mike? What would you do if Pam died unexpectedly?
I mean, I'd like to stay in the home.
You would. Okay. Well, here's the deal. I mean, we could argue covering both of you because you're both very similar situations. Mike is going to have a little benefit there because at the very least you've got burial coverage plus some.
Right.
Whereas in Mike's situation, you're not going to have that.
Yeah, I think I'm most concerned that if something happens to me, that she's taken care of.
That's your biggest concern?
Yeah.
Okay. Then my recommendation, even though you're both doing well health-wise, let's start with you, Mike.
Okay.
Look at getting you taken care of, getting that done, and then if you want to take another look and come back, maybe put some coverage on you, Pam, we can do that then. My goal, and I represent a lot of different companies like we talked about. Mike, give me just a minute here. I'm going to take a look at some things. That's okay?
Yeah.
And then I'll explain this to you.
That's right? Like, I should probably get some extra coverage.
Yeah, because, geez, things are gonna be pretty tight for me, not just on my income, you know?
All right.
So, and you just have insurance at work, and what if you lose it? Or what if you lose your job?
Yeah, I mean, that's what we were thinking.
Right, to get some coverage on you, and we'll just see what it costs.
Okay, so I'm not going to get too crazy here because quite frankly, based on what I'm looking at and based on what you're telling me, Mike, and your concerns are, we've got a $75,000 mortgage. So we can start out, because you've got a 30-year mortgage, start out at covering the entire mortgage, $75,000, covering it for 30 years, you're looking at $136.50 a month. Now, Pam wants to,
Real quick, what does that cover?
as far as if you die,
Yeah.
basically,
Just how's that work? Just any way that I die, or just,
well, as long as you don't kill yourself in the first 2 years, okay, you're covered for anything. This is not accidental death.
okay,
It's a great question.
okay,
So, matter of fact, once this is issued, matter of fact, when I leave here, you're under conditional coverage. What does that mean? That means if you died tomorrow unexpectedly while this is going through underwriting, you would still be protected. And as long as we didn't cover anything up and the policy gets issued, they would still pay the death benefit. I mentioned that because I overheard you say, well, you know, maybe we want to wait, we can talk about that. But that is one of the biggest benefits you're going to see. Once I have you covered, the $75,000 is fixed for 30 years, and the premium is guaranteed to never change for 30 years, okay? Nothing will change, and you die for any reason, even on the last day, in the last hour, the check to Pam would be $75,000, and it would come to you tax-free, okay? So even though you no longer owe $75,000 on the mortgage, because we're talking many years from now when you died, the check is still $75,000. It does not go down with your mortgage. Does that make sense?
yes,
Now, I showed $50,000 as well because I'm a budget guy. I'm sensitive to people's budgets. What I don't want to do is put you into something you're going to be stressed out about every month, because eventually you're probably going to cancel it, and I did you no good. So what I want to do is put you in a place where at least you have enough coverage that's going to do the job that you want to do for your wife. And at a later time, if we need to add more, we can look at doing that.
Okay.
But when you look at these two here, is there one of them that kind of jumps out that makes the most sense to you and fits the budget?
Well, this is gonna be pretty tight, I think, right now. What do you
yeah,
think?
I'd rather look at option 2.
Yeah.
It's a little bit more in our budget.
Yeah,
Well, and you're not really sacrificing because let's just talk today's dollars.
okay,
Let's say we start with 50,000. And understand, a year from now, as long as your health doesn't change, we can bump it up. But if we never did change it in today's dollars, you die tomorrow. Not that I'm trying to put you in the grave, Mike, but I'm just saying, let's just say it happened because we have clients I've had 2 clients in the last 2 years that have died before the policy was issued. But let's just say you died tomorrow and we only have $50,000. Granted, we didn't pay the mortgage off, but Pam wants to stay here, so she takes that $50,000, she drops it on the mortgage, refinances it for another 30 years, and you're living on a payment of probably $200 or $300.
That makes sense.
yeah,
You can't even rent today in a decent apartment
right,
for almost less than $1,000.
Good
Right.
point, good point.
Does that make sense?
right,
Okay. So the way this would work is we would actually fill out the application. You're not paying for anything today. You're going to give me a voided check. You're going to give me your license. We're going to get things taken care of. It takes about 10 minutes. And then I'm going to submit the application. That can take anywhere from 3 days to 2 weeks. I have no control over that.
okay, but what about disability? I thought you said that you could get disability.
Well, you're right. First question I'm going to ask, do you have disability at work?
Yeah, if something happens to me, I probably have some type of short-term disability at work.
Right. And you're 62 years of age, so you're pretty much in that Social Security window. So what would happen is really 2 things. If Social Security or if disability is really important, we can look at putting some on you. But when you look at your check stub, you probably see where you're paying for that short-term disability. Okay.
Yeah.
It's probably, again, very cheap because it's group coverage. But what happens is if I put disability on Mike, what's going to take place is if it gets issued, and what do you do for a living?
I'm an engineer.
Okay, so chances are you wouldn't have any issue. But if I get it issued, you're now paying for a disability rider. But if something happens to you where you become disabled because you're paying for it at work, it's considered coordinating. So what they're going to do is they're going to look at what this disability monthly benefit is. They're going to look at what you're getting through work. They're going to subtract what you're getting from work. And whatever's left, if there is anything, they're going to give you that. Understand, disability is regulated by the government, and on average, they're not going to allow you to have more than 60% of your income. So my point in telling you that is, I really don't see that you're going to get a lot of benefit out of it, and I don't want to put you in something you're spending money for, and later on, if you do need it, hopefully you never do, you're going to find out that you've been spending money on something you're really not going to use.
I think the work coverage is probably good
Yeah,
enough.
I think you're right. But there was one other benefit that we saw on the form, and that was return of premium.
Yep, return of
Can we
premium.
get that?
With most, you can't. Unfortunately, you're out of the window. With most companies, it stops at 50, and I do represent a couple of companies where I could take you to 60, but because you're over 60, I can't. Now, what I'm gonna help you understand is this. The coverage is obviously important, and you can see the value. Would you agree?
Yeah,
Do you have homeowners insurance?
yep,
Do you have car insurance? You're gonna have that the rest of your life, correct?
yep,
Because you have to. Not only by law, but you certainly wouldn't want to be caught unprotected.
right.
How much do you get back someday?
Yeah, we just pay it and hopefully you don't have to use it.
Yeah.
Right.
They'll raise the rates.
Absolutely. And that's going to fix your house or replace your car. This is going to protect your wife so that she ends up being where you want her to be someday, correct? So what I can't do is give you a return of premium, but what I can do is put you in one of the best companies out there, get you one of the best rates you're going to find, and give you the level of protection that's going to change your world in a good way when something happens to you.
This is the one that works in our budget, right?
Yeah, yep, I think it does.
So you feel comfortable.
Yeah, but we gotta be totally honest with you, Tom. We have another appointment with somebody next week.
Okay?
Okay, so can we just wait until we see them?
You certainly can. But here's what I'm going to tell you. I'm an underwriter. I'm not a fancy sales guy. I don't twist people's arms. But the question I'm going to ask you is, do you want to do this? Is it something, whether it's with me or not, is it something you want to have in place?
Yeah, we do.
I mean, Tom made a great point about what this does for our family. I'm comfortable with the price. It's up to you, honey.
Okay, are we locked into it if we do it today?
You're never locked in.
Or not?
Now, here's the deal. I don't want to waste my time writing an application any more than I want to waste yours going through it. If you're going to call me a week from now and cancel. Here's what I'm going to tell you. Here's the reality, okay? You can sit down with 30 people if you want to and look at their products. This I guarantee you. You might find something $2 or $3 less expensive. But here's what I'm going to tell you. My job, my goal, our goal as a company, we represent the best of the best for this reason, to get you the best coverage that you can rely on and there's no loopholes, and to give you the best rate for that coverage. There are other products out there, I can tell you, you may come across, you may not, that might save you a few bucks, but they may not give you the level of protection you're looking for. But here's what I tell all my clients. I'm a consumer as well. I'm going to put you in what I think is the best product for you and get you the best rate. It does me no good not to. If you ever come across a company that you truly believe you can save money with, give me a call. Go ahead and do what you want to do. Let me review what you got before you cancel this. Fair enough? And honest to God, if it's a better product, I'll show you why it is, and I'll tell you go ahead and cancel mine and take theirs. And then I'm going to talk to my partners, and we're going to bring that company on too, because we carry the best of the best for a reason. If there's anything out there we don't know about, we're going to want to know about it.
Okay, well, let me ask you this, Tom. If we sign up for this today, okay,
Mhm.
and we find another product that's better, like you talked about, can we get a refund on this if they take it out of our checking account that first month?
Well, it depends on when it hits it. If the policy shows up, you literally have another 10 days. You can look at it and cancel it, and it's not going to cost you a penny.
Okay.
And this is going to take, with Mutual of Omaha, they're one of the companies that, based on Mike's health, probably 3 or 4 days it's going to be done. And that draft is going to come out. But we can specify the date if that's a concern to you. I mean, if you want to, typically what I do is have it draft upon issue, and then we specify the date moving forward, so you always know when it's going to come out of your checking account.
Okay.
But to answer your question, you can cancel this anytime. There's no surrender charges, not going to cost you a nickel. In our world, it's based on risk and age. So if you come across something that's really going to save you a lot of money, it may not be what you think it is. So if you're clients of mine, all I ask is you to give me the respect of a phone call. I'll come back out, I'll take a look at what you're looking at, and if it truly is better, I'll tell you, go ahead and cancel it and take that. If it isn't, I'll make you aware of what you're missing. And I've done that for a lot of my clients.
Okay.
I think we're ready to do
Yeah,
something.
yeah, I think you're right. Yeah, let's go ahead and go with this one, Tom.
Okay. So what I'm going to need from you, Mike, is I am going to need your driver's license and one voided check. Takes about 10 minutes and we'll be done. Guys, what we've done is I've already filled out the application. I've looked at the license. I've got the voided check. Everything is done. By the way, I always circle for my records what they chose and what they wanted to go with. Because if I ever look back at this 6 months from now, I get a phone call. There's no question which one I wrote. I have a scanned copy of everything in my computer and it's all backed up online. Okay? Now what I'm going to do is I'm getting ready to leave. I've been visiting and connecting while I've been filling out the application. And now what I'm going to do is transition. I've got a couple of questions to ask, and then I'm going to be packing up and leaving. Before I leave, just have a couple of quick questions.
Okay.
You have $70,000 in your 401k, and Pam, you got $90,000 sitting in an IRA. My only question to you is, as an accountant, and I see this a lot, any question, any concerns at all? I mean, I guess my question to you would be this. What percentage of that money would you ever be okay losing if the market went down?
None. Don't want to lose any of it.
We're not really risky people.
Okay, so you're pretty conservative. So do you have your money in a conservative area
Yes.
within the 401k and IRA?
Yeah.
Okay. And there's some issues along with that. It kind of puts you in a tough situation when you go into a conservative area because your money's probably not growing much, but yet you still have some risk of loss. I guess my question for you would be, would you like to see potentially a better option where you could protect that money, never lose it, and maybe use it to either leave it to your kids if that's what your goal is, or create a lifetime income?
Sure. I guess we could take a look at that.
What is your goal with that money? What do you plan on? Are you going to use it for income or just leave it to?
Retirement money?
Yeah, I think we're trying to work and save, and I think this could help us down the road.
Okay, so it's really,
Also income, probably.
Yeah.
Okay.
Income.
so mainly income is the important thing, and whatever's left, someday, you want to pass on to
Yeah,
your family, your
that sounds
kids.
good.
Okay, well, if you can trust me enough, if you guys can leave me a copy of your statement, I'm going to be back in town this time next week. Is this a good time normally for you?
Yeah.
Yeah.
Okay, what I'll do, and there's no commitment, I'm not going to pressure you or anything, but I think I can show you, based on what you're telling me, a far better way to go. And if it makes sense, it's a simple thing. So all I need is a copy of your statement, because I'm going to look at it, break it down, run some numbers, and then when I come back next week, same time, I'll show you what I'm talking about. Make sense?
Yeah.
Okay,
Yeah.
appreciate
Let's
it.
go get it.
All right. But what I want to do is just leave you guys with something. We have talked to so many different clients. And if you're like our clients in your age bracket, the biggest concern that people have is, where do we put our money? What do we do? How do we not lose it? How do we make it work for us and eventually provide us an income that we can count on? What I want to leave you with is, this is actually going to give some questions. A lot of people aren't really sure. Maybe they haven't talked about it yet. You guys at your ages maybe already are. But this is going to help you kind of generate some questions. And if you would help me out, when I come back next week, what I'd like you to do is just take a few minutes together, over dinner, over drink, whatever, and walk through these questions. Circle what really jumps out at you, you know?
Okay.
And there's no test on this, okay? So there's no right or wrong answer. For me, it's really going to help me understand where you're at.
Okay.
And then when you flip it over, and I find a lot of times too, the husband and wife are really in different thought processes here. But what this is going to do is help me understand, what is your risk level? You know, If you lose money in the markets, is your blood pressure going up, or do you not worry about it? Are you somebody that looks at that stuff a lot because you want to know, or do you not care? Okay? And then really with your retirement dollars that you've worked so hard to save, are you looking more for guarantees, or do they not mean anything to you? And if you would just kind of utilize this, and this kind of goes into some of the benefits of what I'm going to show you that a lot of people don't even know exist. And most people will say to me, Tom, it sounds too good to be true. These have been around since the 1500s, and they've been refined for decades since, okay? So if you would just take some time, mark it up, write on it, do whatever you want to do, so when I come back, maybe you can share with me how this enlightened you and what you kind of came to conclusions on.
We can do that.
Fair enough?
Yeah. Sounds
All right, I appreciate it. Mike, it was a pleasure.
Thank you.
Really enjoyed it, man. We got to get together and talk more about helicopters. Pam, it was a pleasure.